Hello everyone. Today is the last lecture of this semester, and as planned, we are going to review the answers for homework number 4, and then we're going to discuss more details about the after-tax cash flow problem. Okay, let's get started. So in homework number 4, we just tested how you have learned the three techniques to calculate depreciation deduction. Um, they are the GDS method, the SL method, and the DB method. Okay, so the first question, but before that, we have also some concepts to test. So this one is to talk about the depreciation. Which one is wrong? Okay, business owners love depreciation. This is correct. And they always want to maximize the depreciation of their properties. Correct, because that will reduce their taxable income. And then everything can be depreciated. So this is wrong because like the land, workforce, and um, a diamond, gold, those things are not depreciated. Third, depreciation quantifies the decrease in value of physical properties with the passage of time and use. That's correct. Time and use. Tax depreciation is an annual deduction against income, such that the effect of time and use on the asset's value can be reflected in the firm's financial statement. Correct. So it will reduce how much tax you owe. So the second one is the answer. And question 2 is to talk about the half-year convention of the MACRS under GDS system. Okay, so according to the half-year convention, which statement is not true? Okay, so first one, in the first year of recovery period, the first year, okay, if an asset was put into service at the beginning of that year, then the whole year of depreciation is allowed. Wrong, because we said no matter when you purchase that equipment or asset and put it into service, no matter when in the first year, to be fair, everyone will only depreciate half year value of that asset. Okay, that's why we have the half year convention. Okay, so that is not true. Let's take a look at the second one. The first year an asset was put into service, only half of the normal depreciation deduction can be taken for that year. Correct. No matter what time of that year the asset was put into service. Right. If the asset is disposed of before the full recovery period is used, then only half of the normal depreciation deduction can be taken for that year. Correct. And for n years recovery period, MACRS schedules extend over n plus 1 years because of the half-year convention. Because you take half-year value from the first year, so you have to make it up so that every penny of that asset can be depreciated. Okay, so this is correct. And so this question is to test your technique about using MACRS under GDS system. So a company purchased and placed in service a new piece of office furniture. Okay, so this is the type of asset we're talking about. The cost basis of the furniture set is 80,000, and then use the MACRS method under GDS system to determine first the depreciation charge permissible in the third year, so which is the D3, the BV at the end of the third year, which is the BV3, the cumulative depreciation through the fourth year, so it's D4 star, the BV at the end of the sixth year if the furniture is disposed of at that time, so it's asking what is BV6. And so the first question, to find out the depreciation charge permissible in the third year, which formula do you use? So this is MACRS method under GDS. So the equation to calculate the DK is this one, B times RK, and RK is from the table. Remember that? According to the table 7-2 in the textbook, which asset class does the furniture belong to? and how many years the GDS recovery period is for that asset. Okay, so in order to check the class, you need to go check this table. And office furniture is the first class. The asset class is this, and then the GDS recovery period is 7. So it's gonna be this one. The depreciation charge permissible in the third year is asking what is D3, right? D3 should be B times R3. So what is R3? Check this table because you're looking at the 7-year class. So R3 is the third row, which is 0.1749. Okay, so it is 80,000 times 0.1749. And that will give you 13,992. The BV at the end of the third year. Okay, so BV3. So what is the calculation? What is the equation you're going to use? BV3 should be the book value, original book value, minus the depreciation deduction in the first 3 years. So it's this one. Okay, it's also equals to the B minus the D3 star, which is the cumulative depreciation deduction through the third year, right? And question 7, to calculate BV at the end of the third year. So BV3, right? You have chosen this one to calculate the BV3. So you need to calculate D1, D2, and D3. So what is D1, D2, and D3? D1 equals to B times R1. Okay, D2 equals to B times R2. And D3 equals to B times R3. Okay, and you just need to check the R1, R2, and R3 in this. So this is R1, R2, R3. Okay, so B times R1 is 80,000 times 0.1429. And D2 is 80,000 times 0.2449. And D3 is 80,000 times 0.1749. Okay, so you can just calculate, and then you will find out the answer. Is this one. What is the value of BV at the end of the third year? Okay, so this is to ask you what is BV3. So BV3 is B minus D1 minus D2 minus D3. Okay, so you just use the values you calculated for D1, D2, D3. So it's 11432, that's D1, 19592, that's D2, 13992, that's D3, and the final answer is 34984. So question 9, to calculate the cumulative depreciation through the fourth year, which formula to use? So this is to ask you what is D4 star. D4 star is D1, D2, D3 plus D4. Okay, that is defined by the definition of D4, cumulative depreciation deduction through the fourth year. Okay, and what is the value of the cumulative depreciation through the fourth year? So this should be, so to calculate this, you should calculate D4 first. B times R4, because you have already calculated D1 through D3. So you need to calculate additional D, that's D4, which is 80,000 times, you go check this table, R4 is this one, 1249. Okay, 1249. That is 9992. So D4 star is D1 plus D2 plus D3 plus D4, and the answer is 55008. Question 11, to calculate the BV at the end of the 6th year. So to calculate BV6, you need to be aware that the furniture is disposed of at that time. Okay, remember that this is a 7-year class. Remember that? But it's gonna be disposed of in the 6th year, at the end of 6th year. So you need to only take half-year value depreciation for that furniture in the 6th year. This means that according to the half-year convention, only half of the year's depreciation is allowed, so that the rate of the 6th year should be. So what is R6 now? Go back to check this table. The R6 for this class, 7-year class, is 0892. Okay, but we said you can only take half of it, so it's gonna be 0.0892 times a half. So it is 0.0446. So when you calculate the D6, you can only use this as your R. So what is the correct value of the BV at the end of the 6th year? So BV at the end of the 6th year is BV6. It is B minus D1 minus D2 minus D3 minus D4. We have already calculated this. And minus D5 minus D6. So we need to calculate D5 and D6. And so D5 is B times R5. B is 80,000. R5 is what? Go back to check this table. This is R5, okay? R5 is 0.0893. So D5 is 7144. And D6 is, we said you can only charge half of this year's depreciation. So it's R6 times a half. So it's 80,000 times R6. R6 is 0892 times a half. So this will give you 3568. So now you can calculate your BV6 is 80,000 times minus D1, which is 11432, minus D2 19592, minus D3 132992, minus D4 9992, minus D5 7144, minus D6 3568. So the final answer is 14280. Okay. All right. Next question is to talk about the SL method. Okay, so a furniture manufacturing equipment has a cost basis of 300,000. This is the B. And a 6-year depreciable life, so 6 years. The estimated SV of the, so N equals to 6, okay? The SV salvage value is 20,000 at the end of the 6th year. So use SL depreciation method to determine the annual depreciation amounts. So to ask, it asks you what is DK. To address the problem, which formula do you use to calculate DK? So we have learned that the formula is this, right? B minus SVN over N. What is the correct value then? Just substitute the letters with the values. So B dk equals to B minus SVN over N. B is what? 300,000. 300,000. BSVN is 20,000. N is 6. Okay, so the answer is 46,666.67. Okay, the next question is about the DB method. So a new semiconductor assembling line, that is an asset, has a cost basis of 40,000. So that's your B, and a 10-year depreciable life. This is your M. The estimated SV is 0 at the end of 10 years. Use the DB method, and you are told that the rate R is 2 over N, so it's 2 over 10, which is 0.2. So to address this problem by DB method, the equation you're going to use is the first one, okay? And the correct value of the annual depreciation amount in the year 5. So you're looking at D5. D5 should be B times 1 minus R to the power of 5 minus 1, okay, based on the formula, times R. So B is 40,000. 1 minus R, we said it's 2 over 10, okay, or you can just write 0.2 here. 5 minus 1 is 4 times 2 over 10, okay. This will give you 3276.8. So that is the depreciation deduction in the 5th year, in the end of the 5th year. Okay, so that's the homework number 4. And then let's talk about this after-tax cash flow problem in the chapter 7. Okay, so in this problem, we have a company which is attempting to evaluate the profitability of adding another integrated circuit production line to its present operations. So it's the company is considering to add a new production line, a new asset. Okay, the company naturally wants to know if this is a good decision or not. So to calculate to evaluate this decision, you need to set this diagram, the cash flow diagram first, and then you want to convert every cash flow to the present worth, and then to see if the present worth is over or equal to 0, right? If yes, then it's a good decision. If no, then it's a bad one. But since we have learned the depreciation deduction, the taxable income, we need to consider the real cash flow, which is after tax cash flow. Okay, so what is given in this problem statement is before tax cash flows. You need to calculate the depreciation deduction and use the table we have learned, this one, to get the last column. That is your final cash flows. And then you use this cash flow to set up a cash flow diagram and then convert all the cash flows to the present worth. Okay, so the first thing is you need to translate the information into the table and fill up the table first. All right, let's see. So the company would need to purchase 2 or more acres of land. So a piece of land, it costs money, okay? The facility, it costs money too. It costs 60 million. And that facility is the net market value at the end of the 5 years, it's 0. So MV5 of the facility is 0, okay? And this first MV is MV of the land. And remember that land is not depreciated. It's not depreciable. Okay? So that you need to keep that in mind. And an increment of working capital, you need to hire people, right? Would be required as well. And its estimated amount is 10 million. So the MV of workforce is 10 million, and it's not depreciable as well. Okay? And so gross income is expected to increase by 30 million per year. So that is your income positive for 5 years. And operating expenses are estimated to be 8 million per year for 5 years. So this is your positive income, this is your negative cash flow. So your net cash flow every year is gonna be your positive 30 million minus 8 million. Okay, like income minus your expenses. That's your net cash flow. So, and the firm's effective income tax rate is 40%. So that is the T. So first thing, you need to set up the table and determine the after-tax cash flow of this project. And then you use the present worth method to calculate if it's a good idea or not. So you're gonna use this because it's told that the facility is gonna be depreciated under the GDS recovery period of 5 years. So this is the column you're going to use to get the R's. Okay, so this is your R1, R2, R3, R4, R5. Remember that it is said the MV of this asset is going to be 0 at the end of the 5 years, which means it's disposed of at the end of the 5 years. So you're not going to use the R6 because the market value is decreased to 0 already in the 5th year. Okay, that's why in this table you're going to have 0, year 0, year 1, year 2, year 5. Okay, so you're gonna have this table, but how do you get those numbers? First, the number of years, it's easy because it's a 5-year project. So you have 0, 1, 2, 3, 4, 5. That's the number of years. And also you have another 5 in the end because you're gonna talk about the market value, okay? And then in the first column, we said the first part in year 0, you have 3 costs: the facility, the piece of land, and the workforce. And they are all costs, so they are negative, right? And then for every year, you're gonna have a net cash flow, which is positive because you have 30 million as your income, you have 8 million as your expense. 30 minus 8 is positive 22 million, okay? And in the end, in the 5th year, you also have some market value left. Although your facility market value is 0, but you still have the land and you still have the workforce. They keep their value. So that's the total market value of the whole project left in the end of the 5th year. Okay. So this is for the workforce. It's not depreciable, so the value is still that. And this is the land. And actually you have a 0, that is the facility. Okay, so that's why you have this MV as 10,275,000. Okay, and then the column B is the DK. Okay, so year 0, the DK is not available, so you can keep it empty. And starting from year 1, you're gonna have D1, D2, D3, D4, and D5. Okay, so how do you calculate? You use B times R1, B times R2, and so on. Okay, so let's say B times R1, that is your D1, and that is B is because only the facility is depreciable. Land and workforce are not. So your B here, you only talk about the facility. Okay, so the B of the facility is what? 60 million times R1. Okay, go back to this table. What is R1? R1 is under the 5-year GDS system, it's 0.2. Okay, so it's 0.2. So you're gonna have the DK is 12 million. And the D2 is B times R2. Okay, so it's 6 million times R2 is 0.32. 0.32. Okay, so if you calculate, it's 19,200,000. And D3 is B times R3, which is 6 million times R3. If you go back to check the table, R3 is gonna be 0.192. So that will give you 11,520,000. And the D4 is B times R4. B is 60,000. R4 is what? R4, if you go back to check the table, it is 0.1152. So you're gonna have 6,912,000. So now, what is D5? D5 is B times R5. Remember, the facility, it's gonna be disposed of at the end of the 5th year, and you know the MV is 0, okay? So you only can take a half year depreciation for the 5-year. So you need to give it a half. So the B is 60 million. R5, if you check the table, it's 1152, and you need to half it. So the answer is 3,456,000. So that is the depreciation deduction in year 5, and this one is a little bit tricky. Okay, and then you have this B column filled up, and column C, that's the value of A minus B. Okay, so we have talked about this 10 million. It is the value of that row in column A, which is 22 million, minus that value in column B, the same row in column B, which is 12 million. Okay, and then you can also calculate the second one. Why do you have 2,800,000? That is 22 million minus 19,200,000. Okay, then you can get 2,800,000. So you just use the values in this row to calculate what is C, what is the value in the column C. Okay, and one thing to talk about is this last row. Why do you have this number? So this last row, if you take a look at this table, it's MV minus BV. Okay, and for this problem, the BV is BV5, right? Because you only have 5-year project, and this BV5 is the BV of the equipment. Okay, and then what is the MV? Is the MV this 1? No, because the MV is only the asset which is depreciable. Okay, that is the MV of the facility, which is 0. Okay, so which means this cell is gonna be 0 minus BV5, and BV5 is what? BV5 is B minus D1, D2, D3, D4, and D5, which means it's the B minus the sum of this whole column. Okay, so let's see, it's 0 minus BV5, which is 0 minus D1, D2, D3, D4, D5. Okay, you already have this here. So the answer, if you calculate that, it's gonna be negative 6,912,000. That's how you have this number in this cell. Okay, and then it's to fill up the column D, it's easier. But don't forget about the negative sign, and then you need to time the numbers in column C by 40%. Okay, so the negative 4 million is gonna be 10 million times 0.4, and you need to add this negative sign, okay, and so on. And this last one is the negative 6,912 times 0.4, but you need to give it a negative sign. So negative times negative is positive. Okay. So that's how you get this column for D. And then in column E, you're gonna just add the numbers in column A to the numbers in column D. Okay. And for the first cell, you just copy the capital investment from the before tax cash flow. But after that, you need to use whatever in the column A. So let's just write it here. Why do you have 18 million? That's because you need to have 22 million plus whatever you have in column D, because number in column D is negative, so it's a negative sign here, and then it's 4 million. So the answer is 18 million, and so on. Okay, and then talking about the last cell, it is the number in the column A, which is 10,275,000 plus the number in column D, which is 2,764,800. Okay, that will give you the 13,039,800. That's how you get this. Okay, so this problem, the tricky part is the last row, and you need to understand the facility is the only thing that is depreciable. The land and the workforce are not, and that is why here you got this number. Okay, this is the tricky part. All right, so and also don't forget about the negative sign here. Okay, All right, so this is all about this problem. And um, the final exam, once again, it's open book, open material, open notes, and you'd better use printed versions of your materials. Um, and But in the examity rules, I have mentioned that digital versions are allowable as well. But mm, just in case, the examity does not recognize, a digital version does not um, distinguish you opening a tab for the notes or you just open the tab for online chatting. Um, in case it does not recognize this, you'd better use the printed version, okay? Because if you use the digital version, it might flag you out, and you don't want to have that hassle at the end of the semester. So you'd better use the printed version. And if you don't want to print all the digital textbook and the slides, at least you want to print the tables and the equations on a textbook, and you want to print the slides in the previous class, okay, which is the summary of this semester. And and also the final exam is proctored either through Examity or maybe you can contact the proctoring service on campus. They might have the choice for you to do some in-person proctoring on campus, but the final exam is definitely gonna be proctored. Okay, so the next class, the class on this Wednesday is gonna be the holiday, so we don't meet, and I do hope that everybody can have a good holiday, although it's a tough time, but enjoy this short break and get prepared for the final. Okay, I would say if you finish the homework and the tests and you followed all the class videos, then you will have a decent grade in the end. And once again, do not refer to the grade in the Canvas. Okay, that grade is not the final grade, and that grade is not correct. So do not refer to that. You still need to want to take the final exam with your 100% energy. Okay, and so that's all for this class. Okay, and good luck to everybody.